welcome to the program, Sally MacDonald, the CEO of the Oroton Group.
Thanks, Peter.
Tell us in on the Oroton story. You know, where did this company come from?
Well, it started in 1938 with Boyd Lane, who's a third generation of the family still involved today. And it started as a fabric trading company, actually, with Asia. And in the 50s came up with this powder puff concept, which sounds like terribly old-fashioned, I think, but at the time it was gorgeous, using industrial metal mesh from gloves that were manufactured in Germany and combining that into this beauty product, which is a powder puff.
Okay. How did you end up being the CEO of this company?
I started as a consultant with the group to help them with a strategy, and it just emerged, I guess. So. Luck and timing, I guess, right place, right time.
So the old management was smart enough to bring someone in with an objective set of eyes.
Absolutely. Well, in retrospect, it's all easy, isn't it? And Ross Lane, who was the MD at the time, stepped aside and sort of welcomed me to the role and gave me the space, I guess, to get the job done, and followed closely behind or in front, around, as executive chairman.
Okay. So what was your background? You were a consultant, but had you been in the sort of the retail space?
Oh, as a high school student, I worked 7 years at David Jones in the women's lingerie and back of Burke Street down in Melbourne. I'd worked in Sports Girl 2 years, but all casual high school, university positions.
Under your CEO's desk for the first time, did you instantly have a vision of what had to be done? Because it was a great name and it was kind of wobbling at the time, wasn't it? What did you see when you...
Oh, look, I guess it's not rocket science. It's a lot of little simple things, and Harry hindsight, you know, it's all completely obvious now. But I think it was just these two beautiful brands. It wasn't just Oroton. We had the rights to the Polo Ralph Lauren business, and we'd owned those for 18 years.
You still have Ralph Lauren.
We still have them.
So
just
if people
been
go to Ralph Lauren stuff, effectively they're working with Oroton
Group. That's right. And we keep them very separate, which is appropriate. So I think it was, you know, obviously taking cost out of the business pretty quickly, but then rejuvenating the design, the bag, the consumer product, the store experience, and I think it's an advantage I have as being a consumer in the stores and thinking it's not quite right, and I want to be excited as well as a consumer, taking off the CEO hat, so to speak. We hired pretty quickly a new designer, a creative director that's very, very talented and has rejuvenated the design with a strong team behind her as well.
And it sends boundaries, doesn't it?
It does. And it's affordable luxury, but it's luxury still, and people feel great about it. You did that. You resuscitated that. So what was the secret?
Well, with a team.
The designer one, what else?
Absolutely the designer, and then rejuvenating stores and really getting close to the product and the consumer and listening, getting out into stores a lot. But it was really about the design and the product, I think, and it's the heritage, the beauty of the brand that we were working with. It has got a warmth, and there's so few brands with intellectual content like that in Australia that are part of our history that aren't sort of thrust down from somewhere else.
That's right.
You know, so we had the freedom to be fast and respond in the way that it deserved.
If I might, Peter,
it's about time you got in.
Yeah, thanks, mate. There were some pretty dramatic changes that occurred at the business once you came in. I don't know if you want to talk about it, but how did you decide which brands you wanted to reinvigorate and which brands you didn't want to invigorate?
Okay, I think it's about the starting gross margin that you have in an accessories model. It's always going to be better. But plus we own, and I had a warmth for that brand, and the economics were always better for it. And in a sense, you can't kill Oroton either. So you just shine it up, and it's off and away. Look, we did do a lot. We moved head office. We moved out of our own logistics operation to an outsourced environment. Saved a lot of money. We let go of the workforce, which was difficult, but it was pre-GFC, so there were other jobs to go to at that time. It would have been hellishly difficult if it happened, a couple of years later. Rejuvenated the design team, got out into stores, changed the culture of the firm, but I think it's also just selected who was going to run the firm with me, because it's not single-handed operation. There's a great team that we've got, and a supportive board actually as well that's guiding the direction as well.
Just for the benefit of Peter's viewers, that Sally is really understating the dramatic turnaround that the company has experienced. I have to say this, Sally, and I've said this on my blog, and I've said it before.
It's not just because you went to university together. They went to university together, they said.
We did go to university dancing together. But Sally is, Sally is one of the future retailing legends in this country if she wants to be.
Yeah.
You know, she is a rising star now. And you know, to give you some sense of, you know, retailing is a business where there's no barriers to entry. You know, people can open up a shop next door and sell purses and handbags. So to get the sort of returns on equity that Sally's achieving now, which is sort of 80% returns on equity, in retailing, that is unbelievable, and you know, and that's not a fluke. You know, for the 5 years before Sally joined, the company was averaging sort of 20-30% returns on equity, and since then it's been 50% type returns on equity, with the latest being around 80%. So you know, I mean, congratulations to you. It's a wonderful track record that you're building for yourself, and I think shareholders. And I've got to say this: I actually still think the shares aren't expensive. Your viewers are going to look at that share price and they're going to see where it's. Look, they're going to look at $3.50 down the bottom there, and they're going to see it at $6.50 now, and they're going to say, well, it's had its run. You know, well, I only said to you a moment ago that you shouldn't take your cues from share prices. No. You should think about values, and the value of this business, for whatever reason. Well, it's, I've got to say, it's, you know, partly Sally and her team. Well, mostly Sally.
How's your health, Sally? Before we go long, are you healthy?
Well, I think the bigger issue. I actually think the bigger issue is not Sally's health. It's that, you know, the risk that someone comes along and says, Sally, we're going to pay you 10 times as much to run something else. You know, that's the really big risk.
That's the company we buy after Oroton then, if she leaves.
Well, maybe you follow Sally around.
But what is so good about this? Like, you've got those numbers, but what is driving these great numbers?
Strong gross margin, cost discipline in the business, fantastic cash flow, really strict financial hurdles for any investment or new stores or refurbishments we undertake. But I know it's a bit sort of loosey-goosey, but it's also just having a constant, open, learning mind and coming from a turnaround or a negative profitability situation, you never take anything you do for granted.
Did you use advertising and marketing effectively, or was it a word-of-mouth tribal thing?
Look, you never feel like you use it effectively because you can never measure exactly what it's driving. So we've learnt probably the hard way on a couple of things that we chose to do. We think we've got the sort of model right now. We did open an online business, Oroton.com, 3 or 4 months into the turnaround, which was pretty hectic, because I firmly believe there's a great future in online retailing, and to embrace it rather than sort of stand back and go, oh, Australians are different, we like to touch and feel, which, by the way, is rubbish. Australians are time poor. Women like me want to buy stuff. They work hard. It's not just a vehicle to sell products, it's to talk about the brand and show behind-the-scenes footage and really delve into the fan base. So
engage with the brand and feel part of it.
Graphic design, web design team.
Are you still with the online?
Absolutely, and it's one of our top 5 stores now. But we have so much fun.
Videos and stuff of people wearing and using
celebrity news and what's happening, how a handbag's made. But I think it's like hyper retailing because you get so much data. This is the page they went to, then they went to that page, and they're all shopping between 12 and 2, Monday to Friday. What's that about? They should be at work.
Is there any other sort of company-related question you want to ask Sally before we wind this up?
Well, look, you know, you sort of gave a clue. You said there's more to come. You know, what are some of the? I guess the question is, can you maintain the quality, the margins? Will those things improve with scale, or is there a risk that you know it becomes more difficult to manage?
No. There's scale will help. Oroton in particular, and we are growing our international wholesale distribution, so that's very risk-free business, and getting interest and sold now the Oroton lingerie and men's underwear in Europe, in Germany, France, in the UK, in boutiques, and emerging interest from Asia as well, which is great. And I think as long as we apply those strict financial hurdles in it, and then if we don't find there's enough projects out there, then we'll keep returning to shareholders. So the model's okay. You know, we're not in a hurry to return everything either. I'd listened to the previous segment. But I think it's just about not being, I guess, in a position where we take it for granted or we think we're better than other people or other companies, and therefore we can acquire a firm and do it easily or do it again. We're very selective, and we've fought hard to get to this position as a company, so we don't want to let it go.
Well, as an investor, you know, I'm always preferring organic growth to growth by acquisition. So, you know, if there's plenty of opportunity there, well, that's absolutely fantastic.
So our lingerie business we can triple, our men's underwear business, which will never be the core of what we're doing because we're a handbag brand, but we're known for quality, and our customers trust us, and we have a beautiful business in that area where we've launched shoes in the last 6 months, little ballet flats that are lovely leather again, so the same sort of what we're doing in classic timeless bags. Jewellery we're growing, menswear. There's more to come.
She's terrific.
Yeah.
Well, Sally, I really hate the fact that I shared you with this so-and-so, but it was insightful.
That's very nice.
And also significant. He has been pushing your company for a long time. So
Thank you.
the stars were aligned when we both turned up in the program at the same time.
Terrific.
Thanks for joining us on the
Thanks for
program.
having me, Peter.
And we'll be watching your company with great
I'll
progress.
send you a gold mesh bag.